good afternoon, investor and corporate. Welcome to SET Digital Roadshow third quarter 20 and 21 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite PTT Public Company Limited to start the presentation, please. Thank you very much.
Thank you. Shall we start today with Khun Thanapol, our VP Investor Relations, first for the key activities and the key drivers, and then I would go through for the performance, and then Khun Thanapol will wrap up for the outlooks and also the guidance. Thank you.
Good afternoon. So let's start with the key activity in the third quarter of this year. On your left-hand side is the activity for PTT and 100% owned. On the right-hand side is our company, listed company. So let's start with PTT. Firstly, we estimate that we will be passed. It is 100% owned by Arun Park. With registered capital around 1 billion. But the objective of the company is to operate an EV business to the digital platform, including the EV rental service, information service for charging, and also the gas station. Secondly, Arun Park is going to sign the joint agreement establish the JV with the company of the platform. The registered capital is not excess 3,000 to the 20. And Arun Park is on 60% and meaning which is a upgrade of the Hong Kong is on 40% stake. The objective of this company is to establish incorporate on the EV manufacturing business in Thailand. FID will be within the second half of this year. Thirdly, Arun Park and also the United Automobile Company, which is an Arabic EV manufacturing from China has signed MOU to study the feasibility for the business opportunity and production of EV in Thailand to the joint venture between Arun Park and Foxconn. Fourthly, PT Global LNG Company Limited, which is the subsidiary of the BT and PTT, subscribe every share of the Big Green Power LNG JV Limited. And for the sale, BTGF and Regime will equally own 50% stake in the Regime Power LNG JV. This objective of the setting up this company is to procure and supply LNG and also export other business opportunity related to LNG value chain. Lastly, PTT and ECAP renew 10 years period of natural gas purchase agreement of platform power plant. For the affiliate started with PTTEP, in this quarter, PTTEP established payment subsidiary to support its future investment, especially in AI and robotics. For example, Livula is for the marine inspection, Skyler is for the asset inspection via the road, Varuna doing smart farming, and also everyone is doing the health data network. For PTOR International Holding, which is the subsidiary of OR, has established a private fund with 500 startup named Awesome. The initial investment is around 25 million baht. The objective of this investment is to invest in the startup company with the potential in the Thailand and also Southeast Asian countries to seek new exports and opportunities. For the last venture company, which is also the subsidiary of OR, Amplify release issue ordinary share of Insat Global received. The amount exceeds 192 million. The company operates on Japanese restaurant brand 4N and other brands. This investment will increase the product diversification and strengthen the potential of OR food and beverage business. For GC, firstly, they exhibit the GC marketing solution. The registered capital is around $600,000. The objective is to support trading on import export and to do the retail and wholesale distribution of product in China. Secondly, GC Inter 100% sharing on its holding with total investment approximately 4,000 million euro. The owner is a global producer of industrial process and racing and activities. Thirdly, the natural works invest in the microplastic fluoric acid and to with total investment more than $600 million. This investment will ensure the growth of the green business strategy of the company, further enhance the agricultural sector competitiveness and promoting China's bioeconomy policy. This practice is expected to COD on 2024. Thailand, they also investment 15.4% increase in China, which is the premier petrochemical producer in Indonesia. The total investment will not exceed $1,183 million. For IRBC, that just FID that investment in the refining efficiency and diesel quality improvement project, or we call UFC, so that they can produce the Euro 5 standard for diesel. GPSC, they also acquired 2 new renewable energy. The firstly is the solar farm in India, where the investment of the 41.6% in Avada. Secondly, GPSC offered to purchase 35% share from Champa and Sidao, which is within the solar farm in Taiwan, with the total capacity around 595 megawatts. So next, for the key outlook for the business driver, for the crude oil price in third quarter, it averaged around $71.7 per barrel, increasing around 7% from last quarter at $66.9 per barrel, following by the supply reduction from the impact of Hurricane Ida on the Gulf of Mexico since the end of August to the mid of September this year, resulting in the decreasing of the crude oil supply in US around 1.24 million barrels. In addition, the OPEC Plus agreed to defer the increasing of the production quota at 0.4 million barrels per month from August to April next year. Together with some of the OPEC Plus members such as Nigeria and Korea and Kazakhstan reduce oil will below the agreed level due to country investment limitation. Demand also increased soon from the easing lockdown policy and also economic stimulation package. However, the new variants of the COVID-19 still put pressure on the oil demand. For the 9 months, the demand price increasing 60% from $41.4 per barrel to $66.2 per barrel, with the same factor of the quarter. For Q1 price, quarterly is increasing 12% from $61.1 to $68.3 per barrel, mainly from the increasing demand in power sector, especially in the South Asian and Middle East from natural gas and coal price. 9 months also increasing around 65%, same reason as in Q1Q. For the gas price, Q1Q increasing 8% from $6.36 per MMBtu to $6.84 per MMBtu, mainly for the LNG import and natural gas. For 9 months, the gas price reduced 6%, mainly from the Gulf of Thailand and Myanmar gas price still have a lag with the fuel oil price. For petrochemical, for olefin both SCB and BP decreased as the demand due from new variants of COVID-19, especially in Asia, monsoon season, and also the overall controversy in China. Aromatic Q1Q both PX and benzene also increasing according to the crude oil price and naphtha price. For the 9 months, both olefin and aromatic increased according to the economic recovery after the easing of the COVID-19 restriction measures. Was spread of COVID-19 vaccination globally, especially in major economy, coupled with the sharp rise in the crude oil and naphtha price. On the FX, Q1Q at the end of the third quarter, baht depreciated around 1.9 baht per US dollar, while last quarter baht depreciated only 0.7 baht per US dollar. But this quarter have more FX loss. For the 9 months as well, 9 months this year, we have more FX loss compared to the last year as baht, beginning around 3.9 baht per US dollar, while last year it's only around 1.5 baht per US dollar. Okay, so next, I have to do here.
Okay, so let's move to the next page, which is the PTT consolidated performance for the third quarter and the 9 months of year 2021. Let's start with the revenue. According to the key driver, Thanaporn already mentioned that there's a hike of the oil price, Q1Q, and also for 9 months and 9 months comparing to the same period of last year. You will see that the revenue has been increased for around 5%. This is from most of our business unit, that is from petroleum and also petrochemical price that increased in the third quarter. Even though there's a sales volume drop for the oil business that been impacted for the lockdown during the third quarters from the COVID-19 Delta variant. For the EBITDA also, actually, our operating still okay for the gas and exploration business, but softened down from petrochemical and refining as well as the oil business. So the EBITDA seemed to be softened for around 2%. This is mainly from petrochemical and refining that been pressure from the volume of the plant shutdown in refineries of our PTT group, GC, as well as the hedging loss in the third quarter, and also the crude premium that increased according to the oil price. The petrochemical price also softened for the PE and also PP. And for the oil business, there been pressure from both in volume and margin from the COVID-19 lockdown, both in oil and non-oil. And for GPSC as well, our power business also have a shutdown for the GECO 1 for maintenance. That's why this period also have lower revenue. In contrast, our gas business been improved, especially the gas separation plant and supply and marketing. The gas separation plant, even though we have a shutdown of the plant shutdown for the major of GSP6 for 26 days, but we have benefit from the price increase of some product like LPG and PP according to the global price. Also, the feed gas costs still remain constant. For the supply and marketing, we favor from the industrial customer that the price linked to fuel oil, and the fuel oil also gain the benefit from the price of the oil increase. Exploration business also improved, especially in the price for the oil liquid price, although the sales volume been declined for around 6% from Pongkot, as well as from the JDA and also the Yadana. Let's move to the net income. The net income been softened down a little bit for 4% Q1Q from around 24.5 billion baht to around 23.6 billion baht in the third quarter. This is mainly also from the EBITDA, as I already mentioned, and also the foreign exchange loss that increased in this quarter because of baht depreciation, which is more than the last quarter. As well as even though this period we have lower income tax and also less of the extra items in the net to gain. Actually, in the last quarter, in the second quarter, we have posted the impairment loss for GC for the Emery Ole chemicals. That one is around like 1.4 billion baht. In contrast, this period we have kind of like some gain from Thai Oil from the bioethanol project, a little bit for 200 million baht, as well as we have kind of like booked some impairment for the some of the supplies for PTT ourselves for 9 billion baht. So net is a gain for around 4 billion baht in this period. And for 9 months, comparing to the same period last year, you will see that all the key drivers seem to be improved, especially from the price side, both for petroleum and petrochemical price that help our revenue in most of our business improve according to the price and the economic recoveries. And EBITDA also improved as well, more than 100%. You will see that this is mainly from the petrochemical and refining business that last year has been hit pretty hard from the stock loss, that there's a volatility of the oil price in the second quarters, and this period they have stock gain. So it means that for petrochemical and refining, especially the refinery has been tremendously improved, especially the accounting GRM, which is improved from loss around $1.8 per barrel last year to around 4.9 billion per dollar this year. Petrochemical also favor from the price improvement both in olefins and aromatics and from the volumes with the economic recoveries. And the exploration and production business also have a sales volume improve for around 20%, and also the price increase around 7% according to the crude oil price, and also this one we have some new of the M&A that came in around like in the March this year from Oman Block 61, and also the start of the Malaysia Block H for the gas in February. So that's why we have more volume in this year period. And for the gas business, also favor from the gas separation plant, according to our key drivers that improve from volumes increase from less shutdown day, as well as the price increase in the petrochemical price, and the feed gas cost still at the low level. And the supply and marketing also improved from the sales volume increase, and also the industrial segment that also improved from the fuel oil price. The net income improved more than 100% from around like 25 billion baht to around 81 billion baht this year. This is mainly from the EBITDA and our operating that's improved, as already mentioned. And also we have some extra items that there's many, but actually there's some gain from this extra item for around 2 billion baht, even though we have more loss from foreign exchange rate from the baht depreciation this year, as well as more income tax expense and also more hedging loss. So next, this one just show you the breakdown for each business, which I already mentioned, the net income and so operating income. But actually, we have been hit from the foreign exchange rate as well. If you see in the middle that even though our margins still have some improvement for the quarter-on-quarter, but there's some more foreign exchange loss for around 5 billion baht. So next, let's move to the breakdown of PTT business that we still operate by ourselves, which is the gas business and trading business. The gas business still have the benefit from the stable income that from transmission pipeline, from PTT LNG, which is inside the other segments. This one still provide a stable revenue to PTT, which is more than 70%. And the volatile one, we still doing this one okay. Quarter-on-quarter gas separation plant, you will see that I already explained about the price improve of some of the products like LPG and propane, that we have the improved performance for around 11%. And also the supply and marketing that improved for around 15%. This is from the industrial segment, according to the fuel oil price that linked to the selling price formula. So quarter-on-quarter, the industrial performance has been increased, even though there's a pool gas cost that a little bit increased already in this quarter. And for the NGV, just a little bit more loss comparing to the last quarter. This is because of the lag time for the price adjustment. According to the price increasing trend, we have a lag time for adjustment for around 45 days. So there's some squeeze in margin, even though we already been able to adjust the public price to equal to the private price in the beginning of this year. And for the 9 months, seems that most of the business has been improved tremendously, especially for gas business for around 74%, from around 38.7 billion baht to around 67 billion baht in 9 months this year. This is mainly from two business, from gas separation plant and supply and marketing, which is the volatile one. The gas separation plant increased more than 1% from all of the type like key driver. The volume utilization rate also improved. The utilization rate for gas separation plant actually improved from around 88% last year to around 92% in this year. And also the price side, the petrochemical price improved in all products, as well as the feed gas cost still at remain at the low level comparing to the same period last year. For the supply and marketing business increased a lot from the industrial business that there's some economic recovery both in volume and also the price that linked to fuel oil, as well as the overall gas sales volume that we have the overall gas sales volume improved for around 2%. The NGV also have less loss comparing to the 9 months last year. This is mainly from the price adjustment of the public car that we don't have subsidy anymore since the beginning of this year. And also from other actually PTT LNG business provides the stable income, but they improve from the PTT NGD, which is our affiliate selling gas to industrial customer. There's a price link to fuel oil as well and favor or benefit from the fuel oil price increase. For the trading business, actually quarter on quarter also improved around 10% for the EBITDA. More than 100% for the trading business. Actually, from the margin improved more than 100% from around like 7 stang in second quarter to around 16 stang in third quarter. This is due to the margin of domestic condensate that's been increased according to the price. Even though that's a sales volume drop a little bit for 7% from the out trading, which is impact from the price gap of Dubai and Brent that seem to be high, and there's less demand for the Brent in Asia region. And for trading business on the 9-month comparison, you see that the EBITDA also improved for around 45%. This is mainly from the margin side as well. The margin improved for around 25% from 8 stang in 9 months last year to around 10 stang per liter in 9 months this year. This is from the margin of the condensate I already mentioned, as well as in the first quarter that they have a wider margin for some product like LNG, LPG, and also aromatics. Even though the sales volume dropped for around 5% from the impact of the COVID-19 that last year they just start on the March, but this year we got the impact longer. So next, you will see that the financial position of PTT is still resilient, which is the total asset increase for around 17%. This is mainly from the increase in inventories and account receivable, which is according to the price that increased, as well as the long-term investment that our affiliate has some acquisition, like Thai Oil acquisition in Chandra RC, which is the olefins business, as well as the GPSC invest in the solar project like in Awada in India. And the hire of the property, plant, and equipment, that's from acquisition of PTTEP for Oman Block 61 on March this year, as well as the construction in progress of Thai Oil project, the clean fuel project. And also for the liability side, also increased from the long-term borrowings of PTT, GC, and also Thai Oil from investment. And also the equity increase from our increase in net income, as well as the OR capital increase. And the gearing ratio of PTT Group consolidated still remain low and also under our policy, which is net debt to EBITDA not over 2 times, and net debt to equity not over 1 times. And we still can maintain the credit ratings at the sovereign levels. So next, let's Khun Thanaporn walk you through on the outlook and also the guidance.
At the level of $68 to $23 per barrel, supported by the recovery of demand driven by the rising in economic activity and vaccination campaigns, and also the higher demand for the power sector from gas to oil switching on the back of a high energy price. The OPEC has decided to maintain a gradual increase in production. However, the new supply recovery from the OPEC Plus like the US due to higher price and a new budget year 2020 second the pressure to the market. For the refined product, we expect to be increased according to the Dubai price. Plus the Singapore GRM for the next year will be around $4 to $5 compared to this year around $3 to $4. Mainly improved from the strength of the light and middle distillate spread. On the gas and LNG, for Asia spot LNG next year, we expect that the average will be around $70.8 per US dollar per MMBTU compared to this year of $15.5 per MMBTU, supported by the lower European gas inventory as well as the strong demand to prepare for winter, and also the global trend to replace the fossil fuel. For the petrochemical outlook, both olefin and aromatic for next year we expect to be softer compared to this year due to we will have the additional capacity coming in starting from this Q4 until next year, as well as we have to wait and see on the China dual control policy. Even though we expect the demand will be recovering, plus the olefin price, I think will be softened around 2 to 3% compared to this year. While the benzene, while the aromatic for the benzene, we expect to decrease around 5%, and PX we expect to increase around 3%. Next, for the guidance for the Q4 this year, we expect the gas fuel price will be increased around 20 to 25%, according to the increasing in fuel oil price as well as the LNG spot market. For the domestic gas demand, we expect to be same level compared to the last quarter. And in the fourth quarter, we have the project COD, which is a non-local public plant for the Innovit that joint investment with the IRBC. We can see around 2.1 KTA COD expect to be done in December. And for the plant shutdown schedule, for PTT, we will have the gas separation plant shut down 6 days, and also ethane separation plant shut down 60% 6 days as well. And also the GNP number 6 shut down after 9 days. For the GC, that ethane cracker orifice, we will shut down around 1 month. For the next year outlook, starting with exploration and production, gas selling price still remain okay according to the Dubai and the liquid selling price in the market. And also then we have more competitive cost as this year they acquired the project, Oman project Block 61, which is very low production cost. For the gas, the domestic gas demand we expect to see slightly increasing despite the higher gas cost compared to this year. For the chemical for the next 1 year for the gas demand we still expect to be around 3%. For the oil, we expect that the demand will resume for the next year due to the easing lockdown of the Thailand. For the PNR refinery, the gross refinery margin will be improved as mentioned, and the utilization rate will be around 94 to 97%. However, for the petchem side, the pricing will be softened because of the capacity will coming in. For the power, we hope that the demand will recover from the economic consumption from the easing lockdown. And for the new energy, next year we will have the target expansion of the EV charger from Arun Park is around 1,350 units. And for OR, we expect another 200 stations. And we expect to FID the JV with Foxconn platform on the mid of next year. For the upcoming projects on the right-hand side, next year we will have fifth onshore pilot and also LNG terminal that will come in on that will COD, fully COD next year. And also the GC there we have the high quality circular plastic resin plant, capacity around 45 KTA, COD on the first quarter of next year. And GPC, the solar power in India will gradually ramp up their capacity from fourth quarter to the next year. For the maintenance schedule, we have the gas separation plant scheduled shutdown on the second quarter for ethane separation plant. This is major shutdown, and also gas separation plant number 2 and number 3 shutdown for 23 days. And for the first quarter, GSP number 5 shutdown another 15 days. For petrochemical, they will have a shutdown schedule same as the gas separation plant. And also for the refinery, IRPC, there we have the plant and major turnaround on the first quarter around 1 month. Thank you.
Okay, the section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investor and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much. ขอบคุณค่ะ